Britain's car industry has done particularly well over the past year, motoring to a record year of exports. More than 1.7 million vehicles were built for export in Britain last year, and the leading exporter is Jaguar Land Rover. The company, whose base is in Coventry, has sold a record 600,000 cars, the most in its 95-year history. Andy Goss is their operations director. I started by asking him how they managed to sell so many cars.
Well, Peter, I think the secret really is that we've been investing heavily for several years now, actually, in terms of new product, new technologies, new factories, and therefore, to a large extent, our performance all the way since 2008 has been product-led, both for Jaguar and for Land Rover. And I think at the same time, we've done quite a lot really in terms of developing a worldwide manufacturing footprint and a worldwide sales footprint. So we've gone from being an export company to truly an international organisation now.
But the weakness of the pound can't have done you any harm.
Well, funny enough, it's not helped yet. Because like most large organisations, we hedge to smooth out the sort of ebbs and flows of currency. And during the last fiscal year, we weren't real beneficiaries of that. Inevitably, in dollar-based countries in particular, it does make us more competitive than we were. But there again, the world is hugely competitive anyway. So it is an advantage, but I wouldn't overblow it, frankly.
In terms of who your customers are, I mean, you've been doing this at a time of immediately after the referendum. Are you exploring different markets now?
No, we had a business plan before the Brexit vote last June, and we still have the same business plan after the Brexit vote. And that's not us being complacent. It means that, we strategically look at what we need to do. And of course, in our industry, when you talk about huge investments in product and technologies, you have to steer a very safe, steady ship, actually. So, we had a plan before, we had a plan afterwards. Of course, it does open up opportunities to a certain degree. The UK didn't really have any advantageous relationships with the USA, didn't have any advantageous relationships with China, and they're two huge markets for us. The only Brexit tension really will be between Europe and the UK.
So is this growth sustainable? I mean, you've mentioned the USA, you've mentioned China. Is this a growth that, having reached this very successful point, can you go on increasing those numbers?
Well, I think from the outside looking in, people sort of say it's a very successful point. Believe me, in this organisation, we're not hooping and hollering in terms of success because, we're on a long-term growth plan. We've invested in the future already. We continue to invest about 17% of our turnover, actually, on new products and technologies. And, we have a very robust future product programme, both in terms of cars themselves and these days powertrains, because the world over, hybrids, electric cars, more efficient petrols, more efficient diesels are here to stay. So, we've got to look at sustainability more than anything else, actually. So we're very optimistic about the future.
Not everyone is quite as bullish as you. I mean, in March, Jaguar Land Rover CEO Ralph Speth said that the company is absolutely more or less dependent on free and fair trade in Europe. If the European Union implement tough, punitive trade tariffs against the UK, how will you be able to maintain your level of production?
We sell 80% of the vehicles that we produce to global markets. So our exports to China, our exports to North America, our exports to most world markets would not be affected. Of course, the trading relationship between the UK and Europe would be, but that's a two-way street. I mean, the German brands sell more cars in the UK than we sell on the continent. So, I think we look at it from our end of the telescope, but of course the other European car manufacturers look at the UK as a very positive market, and I'm sure that they too do not want tariffs to go up there. So it's not in our interest, it's not in the consumer interest. I can't really see it being in any government's interest, and it's not in our competitors' interest. So I would hope at the end of the day, pragmatism will kick in, really.
There is another way of looking at this, of course. I mean, how much do you rely on imports from Europe in terms of what you need for your manufacturing?
That is a factor. There's no doubt about it. That is a factor. We do source from Europe extensively. But at the same time, we've, as I said before, we've developed a global manufacturing footprint. We're currently building a brand new car plant in Slovakia. We also have new arrangements with production in Austria. And of course, we already produce in India, China and Brazil, as well as the UK. So It is a factor. I'm not going to deny it. Let's hope that doesn't come to pass. But it's not the be-all and end-all. We look at the international markets, not just a relationship with Europe.
But if that does come to pass, won't that be bound to have an effect on price?
Well, maybe, but as you mentioned before, the currency situation also works as a counterbalancing measure. So, it could be negative for most car manufacturers, but in our particular instance, of course, the currency changes temper the situation somewhat.
If some of those contingencies we've mentioned, like prices going up and so forth, would you consider moving from the UK?
No.
As blunt as that? Is there no circumstances in which you would consider that?
We've got 42,000 employees globally. 95% of them are based in the UK. We don't need to move our central activity outside the UK because we already have over 1,000 people in China. I mentioned before we're developing a massive plant in Slovakia. We are British, we are a British company. People buy Range Rovers because they're British. This is the heart of our DNA, really.
Andy Goss from Jaguar Land Rover.